If you've ever thought about buying stocks and felt completely lost, this video is for you. I'm going to show you a clip from my premium workshop that explains exactly what a share is, the benefits, so you never have to guess again. In this video, I'm going to be taking you inside my paid training to break down the absolute basics of the stock market. Most beginners stay on the sidelines because they don't understand the difference between a share, which is also a stock, and a fund. By the end of this video, you will have the clarity to understand what you are actually buying. Usually, I only share this level of detail with my paid students, but I wanted to give you this sneak peek so you can see how simple investing can be. And make sure you stick around because I'm going to explain why owning a fund might be safer than owning a share for you for your very first investment. So first, let's address why this stuff feels so overwhelming. Here's what nobody tells you. Investing is just owning pieces of real businesses. And you also get dividends. And dividends, they're just your share of the profit for those businesses. Let's dive into our sneak peek into my paid premium workshop. So, what are the advantages of investing in shares? Well, shares offer two important benefits. You have share appreciation, where the value of the share increases. And then you have the dividend payouts, where the company pays out some of their profits to you as a shareholder in the form of dividends. Think about it like this. Imagine you and three friends buy a lemonade stand together. You each own 25% of it. At the end of the summer, the stand made £1,000 in profit. You could leave that money in the business to buy more lemons or expand it next year. Or you could split up profit and each take home 250 each. So that 250 you take home, that's essentially a dividend. You own a part of a business, the business makes money, and you get a cut. So let's get more specific. A dividend is a cash payment that a company makes to its shareholders, usually every 3 months. Not every company pays dividends, by the way. Newer, fast-growing companies like Tesla usually don't pay them because they're reinvesting every dollar into growth. And that's fine. There's different strategies that work for different companies. Here's what makes this powerful. These payments are usually predictable, so could form a line of cash flow for you. Now let's talk about why this matters for building actual wealth. Here's what really is interesting. Some of the wealthiest investors barely ever sell their stocks. They just collect dividends forever. This is how people retire early. This is how people build financial independence, not by timing the market or finding the next hot stock, but by consistently owning quality businesses that pay them to be owners. Warren Buffett, one of the richest people on earth, gets paid over $500 million annually in dividends. Here's something that nobody talks about. Dividends are also incredible for your psychology as an investor. When stock prices go up and down, some days your portfolio is up 5%, some days it's down 5%. That's the volatility that can make you want to sell at the worst possible time. But dividends, they just keep coming. Market crash, dividend deposited. Recession, dividend deposited. The stock is down 20%, doesn't matter. Dividends still are deposited. This creates a mental anchor. Instead of obsessing over daily movements, you focus on the income stream. You start thinking like a business owner and not a speculator. This mindset shift is what separates investors who build wealth from people who buy high, panic, and then sell low, then wonder why investing doesn't work for them. So, in this workshop, we'll also show you why you don't need to panic when the market dips and what you do need to do when the market does dip. So now we're going to look at stocks and shares and funds and explain them simply. Shares are the same things as stocks, so you can use the name interchangeably. Imagine you and 99 friends decide to buy a cafe together. You each own 1% of it. That 1% you own, that's a share. You can see from the cafe here, that one cafe that is there. When you buy a share in a company like Tesco or Apple, you own a tiny piece or a tiny share of that business. If the business does well and makes money, your piece or share becomes more valuable. If it struggles, your share loses its value. One share is just one tiny piece of one company. What's a portfolio? A portfolio is the complete collection of all your investments, whether it be stocks, ETFs, funds, bonds, all held together in your investment account. Now we're going to look at funds. You can think of funds like this. Imagine instead of buying just one cafe like we had in the previous slide, you and your friends pool your money together and you buy tiny pieces of hundreds of different cafes, restaurants and bakeries. That's a fund. A fund is a basket that holds shares in many different companies. When you buy into a fund, you own a tiny piece of all those companies at once. So you're owning all of this at once and not just the one cafe like in the previous slide. Why is this better for beginners? If one company fails, you've still got 99 other companies. And it's less risk and also less stress. And you don't need to pick winners yourself. Look, I know this might feel a lot, but we've only scratched the surface. That's in my workshop. That's exactly why I put together my complete beginner investing framework, which is in my workshop. It walks you through everything step by step, how to build a diversified portfolio, how to avoid common mistakes, and how to create a strategy that actually works for your financial situation. If you want access to the full framework, just comment the word invest below in the comment, and I'll send you the link directly so that you can sign up. This isn't complicated. You just need someone to explain it in plain English without all the complicated jargon. And that's exactly what I do. So comment invest right now and let's build your wealth together. See you in the next video.